Hello, hi everyone. My name is Shailendra. I'm a partner at Sequoia Capital. Sequoia is a venture capital firm. I've been investing in India and Southeast Asia in early stage and growth stage tech companies for about 15 years. I'm thrilled to be here and very grateful to the team from IIT Bombay Alumni Association for inviting Kunal and me on this session. Kunal here with me needs no introduction. He's probably one of the most famous founders in India, founder of Freecharge and Cred. Kunal and I have had a chance to work together closely for the last 10 plus years.
Oh, yeah.
And actually, we do this regularly, talk about what will happen in the future. So for Kunal and me, this is doing a session that we do routinely late at night sometimes, or on weekends, or what have you. Now in front of a broader audience. But that's a little about me. Kunal, do you want to go ahead and introduce yourself to folks? Again, I don't think you need any intro, but
No, I will. I will go ahead. And few things that missed out about Shailendra is one is that uh, he's probably been the only VC from our world who's been featured in the Midas Touch two
oh
times,
no, please, it's all good.
and also recently made some donation to the IIT Bombay uh, for some of the hostel work and all of that. So all the good stuff, Shailendra.
No, thank you for mentioning it. Not needed it, but I appreciate it.
And I'm a unusual founder, and I think being unusual has been advantageous because everybody else is similar. Mostly from IIT. I'm not from IIT. I'm a philosophy major trying to do tech startups, and um, have mostly been lucky, and I'm hoping that the luck continues. But happy to be here and answer any questions. So what I would really appreciate while you guys are seeing us, keep sending us the questions. We'll keep seeing them on the side, and we'll keep randomly picking them here and there to answer that. So Shailendra, back to you.
No, thank you, Kunal. By the way, again, Kunal won't say this. I have a great funny story. First time I met Kunal, he was pitching Freecharge, and he had run a BPO business right before that. In the first meeting, I asked him, Kunal, what is your CAC at Freecharge? And he looked at me blankly, saying, "What is CAC?" By the way, his first slide had some philosophical thing about why free is so powerful. I don't remember now, Kunal, what it said, but that is like the cover slide had some deep philosophy behind free. And I think from then to now, Kunal has become, from not knowing anything about consumer internet, he's become one of the gurus, and somebody I have learned from tremendously over the last 10 years. So and Kunal's sessions are incredible and all that. And so I'm going to ask Kunal to do more talking than me. It'll be more valuable for all of you. And so Kunal, let's talk about this idea of 10 years out, right? Our topic is FinTech 2030. And lots of people believe, that the banks are being disrupted and other kinds of incumbents are being disrupted in FinTech. What's your view? What in 2030, what does the world of FinTech look like?
As always, it's hard to make predictions, but there are few trends that one can look at and start making draw some lines in the future. One thing that is really happening is the whole concept of money is becoming quite interesting, right? Like, what do we define as money, and what is really the medium which creates trust between two individuals to exchange value, right? And I think I see a lot of disruption in that, because now there are enough people with a lot of trust of their own that can create their own versions of currency, and crypto is just one manifestation of that, on how exchange can be done between value, right? And uh, we may actually create a new version of how exchange of value is done, which kind of gets out of the purview of governments, countries, all of that, and an exchange of value could be interesting. So we don't know how value will move. In terms of form factors, uh, smartphone has historically been known to be the graveyard of a lot of products that existed in the physical world before, right? We used to all have calculators and cameras, and the icons are now on the phone as the memory of those things, and it's a graveyard of all physical products. We should not be surprised if money comes as a tombstone in one of the apps, and it just becomes that. And it should not be surprising us. Having said that, cash, I don't think will ever disappear, because there is a reason why humans love cash. Like, one of the less known fact about Singapore actually has more cash than India has, although the country rarely transacts in cash in terms of merchant payments and all of that. And that requires a deeper research on why so many countries have a lot of cash, although there is no transaction happening in cash. There is also a view around where will lending be done? Like, according to me, all lending will move to all the destinations of desires, right? Every destination of desire where you want something and you do not have the money to do that, you are not going to go one day to borrow from somewhere, put it in a bank account, and then go to your destination of desire and unlock that product or service. It's very likely that all the places where the destination of desire exists will become a place where money will seamlessly flow and your identity will become horizontal across all layers. And therefore, to me, lending is merely a feature now. It's not a product anymore. It's not a company anymore. It's not a startup anymore. And therefore, I do believe that there's going to be, but I don't think the same thing is going to apply for deposits, because deposits, unfortunately, does not work in the same manner, because the color of money is something I don't care about when I'm trying to borrow, because I'll say, koi bhi de do, koi farak nahi padta. Like, but when I'm giving somebody, I want to know who they are, what's their background, what's my protection, so on and so forth, right? So the question is that I foresee that money may get concentrated on deposits with a fewer players, because now they can attract deposits. For example, in the past, let's say a bank had to have physical branches to attract deposits. But if a brand takes a bigger and bigger trust role and increases the reputation dramatically, now they can seamlessly take deposits from the whole a country or the whole world sometimes. And there will be maybe concentration of trust in terms of deposits. But when it comes to lending, I think there'll be extreme fragmentation, and almost every player could be a large lender. We all know that lending is kind of appearing everywhere. But the interesting thing that I have seen in China, that even TikTok is a large lender, right? And that tells you a lot about how distribution from content may lead to places where people will do transactions and so on and so forth. I do foresee that, I do believe that payment pages will disappear. It's stupid that we have 400 payment options and consumers are confused about the payment page when all they want is the product, right? So I do predict that maybe the future of payments is no payments page. What if the world allows you to seamlessly operate your trust and consume? And can there be frictionless consumption, right? In terms of will banks get disrupted? Will platforms get disrupted? I have a very simple view. Any company that has unlimited trust and unlimited frequency will have the ability to cross-sell anything, be it loans, be it shirts, be it products, be it anything. And I think the future of almost all businesses looks like a place which is driven through content and distribution and frequency, and cross-sell just happens to be the case because there is reputation and trust that the platform carries. But it's going to be a fun world because the lines have already become blurry, and your disruptor is not coming from your category at all. You are not even, I'm sure a banker is not even thinking of TikTok as a disruptor, but I would put my money on TikTok to be the biggest disruptor in the world versus, let's say, a fintech. So this is where I see a lot of the world. And 2030 is far out. Like, we see 1 year of COVID change the world so much. 2030 is crazy. But Shailendra, one big thing has happened is that we accelerated the human approach to technology in 1 year's time, because when everybody was isolated, the only way you could connect and interact with the world was technology. So all age groups have figured out how to use technology seamlessly and do not need a help in the house with a young person to help you with technology. Almost all age groups, all income groups have figured out how to rely on technology to get things done. And that's a very interesting time to be building businesses.
Yeah, no, totally. Actually, you used to say many years ago, Kunal, and I remember some of our chats then, the banks in India were trying to bring various kinds of food delivery and ride hailing to their apps. And you used to say, look, the solution is not to bring these services to the bank app, but to bring the bank to these services. So there should be financial services at the point of consumption. And, that does indeed seem to be how it's happening. It's very interesting. People think of lending I actually think of credit, and credit is an enabler only of two things. It's either an enabler of consumption or an enabler of investment of some sort. That's it. So if it's an enabler of consumption or an enabler of investment, then it should exist at the points at which, those two happen, which is why, your tagline of lending is a feature which is greatly, greatly used across so many people I keep reading on Twitter, is indeed the way it's becoming. Anyhow, but one question we didn't answer, Kunal, will the banks continue to have, if you had to bet, will banks have more market cap in 2030 than today or less?
If credit truly becomes seamless, the world's GDP will take off. And if the world's GDP takes off because you remove all these restrictions through which money is seamlessly flowing, and consumer, like for example, I recently found out that Korea saw a huge growth in credit because they allowed income tax stops if you use a credit card. Now think about that for a second, right? If in India, if you got income tax rebates for using your credit card, what happens?
Yeah, regulators have a crazy role to play in everything for sure.
Now the thing is that just this one signature move can create such huge market cap growth that it doesn't matter what the bank's market cap is today, because the market is going to be so big, right? Like the overall market cap of financial services will at least 10x. So I would say banks' market cap will definitely not reduce. My bet would be that the overall market cap on financial services, the moment you make some of these things seamless and powerful, obviously with a lot of rules and regulations and guardrails to not make sure it becomes this crazy world, but 100% like there's going to be always more market cap in financial services because money is truly exponential and non-zero sum. So if you have to believe in that, it's a fuel that drives horizontal. It's energy, right? It's going to be fueling everything.
No, I think this is an important point. I also believe exactly this. I think when people say banks will get disrupted or insurance companies will get disrupted, I actually think what they're saying is that the future market cap will get shared amongst new and incumbent companies. But actually, it's not a finite game. It's an infinite game, right? So, in a finite game, one would have to win at the expense of another. But if you believe it's an infinite game, then there's a need for these regulated entities that hold very large balance sheets that comply with RBI rules and norms, which a lot of startups will never want to. And actually, so I agree with you, and I feel like actually banks are a big enabler. Now their role diminishes. Will they continue to have the same ROA? Maybe not over time, but I think they have a very interesting, important role to play even 10 years out.
Yeah,
I'm still a believer that the banks will continue to grow market cap.
I do believe that, Shailendra, there's going to be one important change that's going to happen. That banks relied upon branches, and branches were always built around places which had a lot of DAU in physical world.
Correct.
Now the DAU is moving to different places, and time spent is moving to different places. So the branches have to make a shift.
Agreed.
So to me, fintechs are nothing but the new bank branches who should be technically charging rent or doing revenue share, like just like a mall does or a high street does. And as that world kind of transcends into this, the product and services just need to appear at the places where consumers are consuming, consumers are spending time, consumers are coming on an everyday basis.
Yeah, I think it's a very good point. And I actually think you are making a super interesting, nuanced argument, which is not just that the branches are how consumers interact. So the channel has changed of interaction, but also equally the user experience has changed.
Correct.
So I think actually many traditional banks made the mistake of thinking of tech as one more channel. And they said, look, we also have a website, we also have an app, we solve the channel. The problem is the user experience, however, is quite bad, right? So I think,
I'll tell you why this has been the case. I think historically, fintech products have been made by people who love money and who love investing and who love understanding compound interest and all of that. Moment more and more founders who do not like money and do not like how banks operate and do not understand compounding, when they start building stuff, right, they will think consumer first, right? Because the consumers can't think in this ROAs and ROEs and all of that. They can barely understand compound interest and inflation, right? So my view is that as soon as an onset of founders happens that understand consumer first and fintech is their second language, they will start transforming the user interfaces Because historically, the people who understand finances were trying to understand consumer and build app products. See, historically, branches required a good manager to cross-sell really, really well. In future, cross-sell will have to be done by software. There are no human beings involved. And therefore, somebody who understands consumer at a more horizontal basis. Because I can tell you one thing, Shailendra, nobody really enjoys doing finance work, right? I don't know anybody who loves paying their credit card bills. Like, ooh, like, whoa, 8 a.m. I'm going to wake up and pay my credit card bill. Like, nobody enjoys that, right? People enjoy consuming. People enjoy becoming wealthy. People enjoying getting status. So the thing is that the core motivations for a lot of people who are from the banking world who love this stuff, for most people, it's a complete annoyance. Like I was telling my team that we have ESOPs in our team, and 80% of our team has not even logged on to the ESOP platform to see what the value of the stock is and how it's doing and any of that. Like, talk about this, right? Like, it's just like we think that everybody enjoys money and understands the game of money, but most people are enjoying life and they want their life to be interesting and not boring.
Yeah, you raise a very good point. There is one, at least I have found there's one need for caution though. So, a lot of fintech founders think more like tech founders, which mean high burn for many, many years.
Yes.
Versus financial services founders, which means, frugal, profitable, sometimes bootstrap businesses, etc. One of the risks I see is, that founders need to really wear these both hats. Actually, from a very purely financial economic perspective, these two need to be done together because, like, for example, I've seen some companies try to bring this idea of subsidies, which is used in tech,
Correct,
to financial services. And, many years ago, I remember famously telling a founder or telling somebody in my that I can't possibly see the day when somebody will try to subsidize interest. But, lo and behold, you do see some of that happening also.
yeah.
Maybe it's called cashback. Maybe it's called something else.
Yeah, but I think it's an important point to talk about. First of all, uh, if you do not make money in financial services, there is something fundamentally wrong. Because it is designed to make money, right? The question is that how do you think about burn, right? Now, if you are burning equity to get significant dominant market share, right? That is fine. But the thing is that you need the cashback or money to attract customers or to retain them, right? If you are spending cashback, if let's say, if the always question to be asked is that what percentage of customers will stay if I switch off my incentives, right? If the answer is barely anybody, then you have no product market fit, right? And if you say most will continue to be there, if I remove this incentive, then you have a real product market fit and you only use the incentives to kind of get the market share and so on and so forth. So the thing is that I think people confuse this sometimes. For example, I know that in the early days, there were like 10 laundry startups were funded, which were only working because they were like almost giving laundry for free. But the moment you actually start for the real laundry service, most people are like, no, I have a buy at home. I don't need laundry anymore, right? So the thing is that will the stopping of incentive, like that question, when you stop spending money on incentives, how many will stay? And that is the real question that you can trust a startup with that. And sometimes creating habits, all of that market share requires. And I think what founders are knowing is they're not really burning money, they're burning equity. Financial services guys, if you look at, let's say, Uday Kotak or any of these guys, they have not burned equity. Like, equity is intact, right? And like the tech founders like barely have any equity left, right? And I think we have unfortunately incentivized the behavior of burning equity to a point that founders are like, it's okay, I'll own 7% at the end of it when I become a unicorn, but that's not cool.
Yeah, I agree 100%. I keep having weekly conversations with founders saying, don't dilute. Please act like an owner, remain a large owner in your company. That's actually in our long-term interest. It's not ever in our long-term interest as investors for founders to get heavily diluted and not act like owners. So couldn't agree more with you. By the way, on this point also, Kunal, people don't realize, like, we have NBFC investments like Five Star Finance, Aptus Housing, Finova. These are highly profitable companies, hundreds of crores of PAT per year, still compounding at 40, 50, 60%.
Correct.
And think a lot of tech founders don't understand that, financial services companies can be built with a high degree of profits. And there is almost a better way of building them. You don't have to burn a lot of money. Now, sometimes it's justified if you're pursuing a, call it a very interesting or different strategy. But in many cases, I don't think founders fully internalize
I think that burning money is the fastest way to stop your brain from working.
correct,
Right? Because
100%.
it stops all your creativity, right?
Yeah,
Because
yeah, you solve problems through money. Correct.
yeah, if you throw money at the problems never go away. They just hide for a bit, right?
Correct.
And they come back.
Yeah.
But unless you solve it, for example, like if you tell the team that, hey, what if we had to earn negative CAC, then what would we do? And suddenly new sets of ideas come because it's the fastest way to becoming dumb. And I'm not saying that I have figured it out. I'm just saying I know it internally and I'm self-aware to know that more capital in the company has only made company do stupid stuff on a more regular basis. Thankfully, I have the luxury of all the experiences of many founders that I've invested in, of my own money raising capital. Like, for example, every time we raise money, we do not celebrate it as a culture, right?
No,
Because
not only
it's
that,
not about that.
what people don't appreciate or know about cred is that last time around when you raised, call it 80 or 90 million, you were probably offered 4 or 5 times of that, right? And you chose to keep your round fairly limited in size for the scale of company you're trying to build. And the same thing for the current round of financing, right? Which I thought leaked or whatever. But the point is, people might think of it as high raise and burn, but they may not fully appreciate is that you're actually saying no to hundreds of millions of dollars of additional investment for the same reason you mentioned earlier, which is that you don't want to burn all this equity.
Yeah, and the thing is, I've rarely seen money solving problems, right? It can be a catalyst to an existing solution that accelerates, but money by itself never is a solution.
Yeah, totally. Especially in financial services, very relevant because I feel like in some other forms of tech businesses, you can argue for a very deep J curve, gestation period, and so on. I think in financial services, we tell all founders, be as prudent as possible. And to your point, Kunal, I think burning money becomes cultural, unfortunately. People justify it through logic, but I think actually it becomes deeply cultural in a company.
That's a very interesting thing. So, Shailendra, think about this. There are so many founders in India who've never made a profit in their life.
Correct.
Okay. Fortunately, there are people like me or Vijay who ran companies which were profitable before, right? And I think, imagine this, we start from the same starting point, and every time these founders got more recognition, more awards for burning more money, and
Correct.
then burning more money. And what is their incentive to suddenly become profitable, right? So the question is that, what are we celebrating, right? Like, why should we celebrate? Uh, uh, why should we should give awards to founders like Nitin from Zerodha, who's like not burnt money and built this particular platform for whatever he's done. Now the thing is that unfortunately, the media will recognize all these high burn people and put their photographs on the front page, which I personally think is a very bad thing because everybody thinks that raising money is the milestone, which is not the milestone.
No, agree completely. And by the way, also very worrisome. We are again in a hot market. Lots of capital is flowing in. Mega rounds are getting raised. My number one source of worry right now, paranoia, is, once people get 2, 3, $400 million in the bank, or even 100, what they next do is they try to figure out how long should it last. And I always tell founders, no, like if you raise $200 million, that should be the last money that you ever raised, right? And like that's plenty of capital to build most businesses in the world. But somehow the to your point, because capital raising has become symbolic of success, and the signaling power of that is helpful. That has become somewhat of at least a transient end unto itself, which I hope. I think there are lots of, while there's Nitin, and again, incredible of him to have bootstrapped it. There's also many other founders now, as you know. Pine Labs in our portfolio has built profitably for the last many years. So I do think as our ecosystem matures, I think there are many more founders who are understanding this importance of building pretty frugally and sensibly. Very good, Kunal. Let's change topics quickly. I think we should stop in 5 minutes and open for lots of Q&A.
Yeah. I think we have already seen some questions coming in, so we should probably look at it in the next 5 minutes.
Yeah, one question for you, Kunal. Do you think Indian fintechs will start buying banks?
Ah. um, I do foresee blood relationships. I don't know if it comes in form of marriage. I don't know if it
Yeah,
comes in forms of partnership, of equity ownership amongst each other.
yeah,
I don't foresee uh, mergers in a reverse manner, but I'm 100% sure that uh, the line between fintechs and banks will quickly disappear, and there'll be lots of cross ownerships. It can be minority, it can be majority ownerships, it can be
yeah,
different things. One thing that I think banks should avoid doing is try to make that fintech like a bank, because
yeah,
fintechs
yeah,
are
of
not
course.
built by their people. Like, and the moment the tech starts feeling like IT, that's when it
Yeah,
disappears and stop becoming a fintech, right? So uh, I think if a bank can figure out a way to let something be on their own
right.
and bring all the support that they need to make a lot of these things happen. And I think it's going to be an interesting journey because uh, while there are a lot of founders in the ecosystem of fintech, there are mostly CEOs on the banking ecosystem. And it's a very interesting mix to think about. I remember loosely one comment that I heard from a bank that, like, if they do make an investment, sometimes the founder of the startup is likely to have more equity in the bank than the CEO of the bank. And how do you solve that moral conflict or ethical conflict that you may have in your mind while knowing that the future is tech? So the question is that this balance, any bank that will crack it will actually see much more powerful results coming out of it.
Yeah, super interesting. By the way, as you know, and maybe many of the folks listening in may not know, I'm on the board of a company called Gojek in Indonesia, which is, which is now a double-digit $1 billion in market cap, in private market cap. But they do own a 22% stake in Bank Jago, which is a licensed bank. So Kunal, to your point, it's a minority interest. And as everybody knows, banks are highly regulated, and therefore it's also hard to out and out go and own a bank. Most regulators will require their consent and approval to go own a bank. But I think the idea of buying a bank also applies to buying an AMC, to buying any licensed entity, because a lot of financial services product issuing, whether it's insurance manufacturing or it's asset management companies that may issue mutual funds, or even card issuing in many countries is actually regulated. So you need a card issuing license, etc. So to the extent that I think many financial services products are regulated and need license approval, I think this role of regulator is super, super, super important.
Yeah,
Um,
honestly, Chandra, I think we probably have the best regulator in India. I
yeah,
think they are insanely proactive, tuned in, gets all the nuances, uh, supports a lot of the stuff, right? But the thing is that every new movement of shift causes new scenarios, and those new scenarios require new possibilities, right? It's like
correct.
a river is flowing and you build a dam and suddenly it results in three more streams, and then you need to worry about, okay, how do we manage those three streams now? And I think uh, we should be okay with that as long as the innovation continues and the cycles continue in innovation, right? Because this country is not going to be built by creating more branches anymore. COVID has kind of ensured that people are less interested in less in cash and less going to a branches. And if we are already on smartphone with the lowest cost of data, lowest cost of hardware, everybody kind of figured out how to use tech due to COVID. This is a time to really build a very different country, and it requires a lot of innovation from founders uh, to think about financial services in a truly unique way, because even a micro segment is a $10 billion company, right?
Yeah,
The
correct.
market cap that's going to be created by this, like, so I don't know if you would think about this, but I think by 2030 it's not hard to imagine like $2-3 trillion market cap just in financial services. I don't know if you think that is absurd to think or not.
Yeah, I think the aggregate amount is a very interesting number, but it's not hard to see, several $50 billion fintech companies, and obviously the banks will keep going. So the aggregate number, will it be in the trillions? Should be, because even today, I think traditional financial services market cap is already in the $1 trillion zip code, right?
Right.
So I think I think quite possible. But I think to me, what's very interesting is, and you and I have had this chat many times. I think one very simplistic way to understand the value of a financial services company is, for many types of categories, it's $1,000 per user, give or take. If you're a consumer facing business, right? So if you have 10 million accounts and you're a lending business, or if you have 10 million accounts, you're an asset management company, etc. I mean, it's a super rudimentary approach, and it can range from between $500 per sub or per user to a few $1,000s per user, even for very high value like wealth management and so on. But with India's user base, I mean, that's not hard to see at all, right? So
yeah.
So the minute you get 10, 20 million high value users, it's not easy to imagine double-digit billion-dollar market cap.
Exactly.
And I see. By the way, I see the same thing that you see happening. Kunal, I'm going to ask you one potent question, which you have never said cred is that, but I think cred is that. So I'm going to ask you a potent question in a minute.
Okay.
But nobody has asked you this, and cred is obviously great product. It's building a bunch of financial services. Is cred a neobank of the future?
I think a neobank of future is not a bank.
Correct.
The way platforms will monetize is through financial services. I think trying to build a neobank is not using your imagination well. My view is that companies will monetize through financial services who have high quality users with high engagement and high frequency, right? And why limit your monetization to financial services? Why not do everything in a country where trust is low, and if you can create a high trust thing? So to me, cred is more like almost like a parallel country of high trust individuals who happen to be of also high affluence. And as long as anything we can do to increase their financial progress, or anything that we can do to make their consumption frictionless, we will do all of it, right? So, to me, I would say we are going to monetize through financial services. Do we want to have the tag of neobank? Absolutely not.
Yeah, and so my view is, by the way, I think to your point, the neobank of the future, we all somehow wear the lens of our view of the bank of the past.
Correct.
But I think Bharat Pay, Reza Pay, Pine Labs, these are merchant-centric neobanks of the future. They will provide merchant-centric products, services. They could involve, deposit taking. It could involve lending to merchants. It could involve obviously payment processing. And I think, folks like yourself, Grow, Zerodha, in different ways, these are the neobanks of the future. I don't think those neobanks of the future will look like the traditional banks, to your point. When people think of this idea, they somehow think that CASA is has to be how the neobank of the future looks, right? The current account, savings account, but or it could be card issuers. So I think this point is very interesting. My view is also that people will start in different places, but eventually there'll be lots of convergence. So to your point about
eventually, like we have always discussed, the people will monetize through lending and advertising eventually, right? So all businesses will converge to these two large revenue driving opportunities. And it's not hard to imagine, Shailendra. Like according to me, every internet platform is a neobank. It doesn't appear to be that right now, but we can all bet
it's very interesting you say this. I agree with you, but somehow some have not embraced that destiny. So for example, I used to always wonder, why do OTAs in India were the first guys to get the folks who could fly on airlines. They, like people who are buying air tickets. This was the affluent people of India.
Correct.
I used to always wonder, why have the Indian OTAs not launched financial services?
Correct.
And so with Ferry and Traveloka in Indonesia, one of the things we discussed early in Ferry's journey was why not get into financial services? Your users are the best users to launch cards. And now the card that Ferry issues.
This is a curse of vocabulary. When you accept that you are an OTA, then you do OTA. If you say you are a consumer platform that will empower all of these things, you change the definition of what the people's imagination in the company could be. For example, let me ask you a question: why is Sequoia just a VC? That's the thing to think about, right? What
Yeah.
do you really want to do? Like, what is the role? And if you, the moment you change the definition and remove the word VC, the
I think we are
possibilities
trying
are.
many other things too, as you know.
I know. I'm just forcing you more in that direction, saying that
Yeah,
like,
yeah.
what is a VC? Like,
We
what
have
is the
folks who
point?
build technology, correct, correct. We have folks who do go to market. We have folks who do,
See, we have
like you.
transient labels, Shailendra, and the labels have to be given up sooner in life because
Correct.
ultimately there is going to be a few platforms that consumers trust, value, respect, look up to, and will do more things with them, right? And for example, what is Amazon, Shailendra? What is Amazon? Like, can we please define what is Amazon anymore?
Yeah.
According to me, Amazon is just an equation now. Like, it's just an equation that just continues to compound.
Yeah. I mean, what is Amazon is a very, very long conversation.
Exactly.
Okay, last topic on fintechs of the future. We have talked about this a little bit, and also talked about this in the context of cred. Should we launch in other markets or not? Because look, you are creating a category, right? Both your companies, Kunal, and I don't know if people fully appreciate that both of your companies were massively pioneering in extrapolating very powerful but very nuanced small insights into a very large user base, and then obviously a bigger, wider strategy. So candidly, with both companies, there have now been companies that have tried to do similar things and gotten inspired in other parts of the world, right? There were feature. We kept seeing for years, we kept getting pitched that I'm the free charge of this market or that market. And I'm quite sure the same will happen with cred as cred success becomes more widely understood. Now, you've also thought about going to other countries, but do you think in 2030, some of the fintechs, are they going to be global, not be global? Can other fintechs come to India? Historically, the banks were all regional, but
Yeah,
tech companies have an easier chance of going across borders. Any thoughts on that?
I think, Shailendra, the only way you can be multi-country is that you take a very sharp offering and standardize that so much that it can fit into multiple countries, right? But the moment a company becomes deep into 7, 8 verticals and you don't know how to do that, you need to find the new Trojan in the other market and start from there, right? You can have you can't start as a Swiss knife in that market. You have to start as a knife. The question is, what is the knife? Is the big question to ask. I
Yeah.
do believe that uh, many companies will have the ambition to say, hey, we get this part really, really well, and we're going to go do this in multiple markets. But financial services is an interesting category that your own market can create easily 30, 40, $50 billion market cap. The question
Right.
is that, do you distract yourself with that
Yeah.
or not, right? So even when we think about this, we'll not truly do international. We'll find some connection to the existing customers, some connection to the, say, Indian diaspora, and build around that, because it has to be adjacent enough. Because you can just say, like, for example, credit card outstanding in India is $14 billion, right? Credit card outstanding in the US is $1.4 trillion, right?
I
So,
know.
so
It's
the
crazy.
question is that, like, you are like, damn, like, I'm like this big guy in this particular market, but you are like literally nothing in the universe of outstanding on credit cards, right? So the thing is, it's a matter of time when companies start thinking what their choices are. In my view, like many companies like Cred who are in low trust markets will try to do more through their brand name within their country versus take the opposite approach, because in low trust market also there is concentration of trust, right? So you see superstars, super apps, and super companies emerge in low trust nations because there is concentration of trust. So like 15 people in Bollywood control 90% of all revenue because there is concentration of trust.
Yeah, totally. Very good. Should we look at the chat list to
Yeah,
see if there are
sure.
any interesting questions?
Yeah, you can pick whatever you want from this. I'm just reading them as well.
And also, if other folks have questions, we want to make sure we leave enough time. So we have about 20 minutes. Please feel free to send in your questions. Okay, this is a good one, Kunal. How do you see credit cards evolving if buy now, pay later through UPI becomes seamless and adoption picks up?
Uh, what is never going to change is human motivation to pay later. We love paying later. Nobody is ever excited to say, damn, take my money, like now, abilo. Like nobody likes that. So the human motivation to pay later will continue. The human motivation to remain more and more lazy to do a transaction will also continue. So anything that reduces the friction to do a transaction will continue. Human motivation to doing transaction that makes them feel extremely safe will continue. Human motivation to uh, not carrying extra devices. For example, uh, all of us currently carry a wallet right now, physical wallet.
Yeah.
Do we really need it anymore? The question is going to be really asked in the next 10 years.
Yeah.
And maybe the next generation will say, like, it's like camera, like who carries camera? It's on my phone. Like who carries wallets? It's my phone. Like all of this stuff is going to, all these extra products that we've been carrying physically might disappear. So I do believe the future of cards is no cards, but future of credit lines, formats of product will continue to be the case. It's just that the dissemination will change. And maybe there'll be a decentralization of a card, right? BNPL is one decentralization. A loan, a personal loan is a different. I think buying products on EMI is a third decentralization. Reward points is a common layer will be interesting. So the thing is that the consumer motivation will get decentralized and the product may change its form factors. But it's not hard to imagine in 10 years' time we will have no cards, but we will have a lot of credit lines that we need to take care of.
Correct.
Because we have borrowed from them.
Yeah, actually, it's very interesting, Kunal, when people talk about buy now, pay later, and so on, I'm reminded one time I was at a World Economic Forum session in Southeast Asia here in ASEAN. They had a steering committee meeting and they were talking about, making wallets interoperable, digital wallets across GoPay and OVO and everybody else. And they said, hey, we should create a common way for people to settle so that one wallet can pay across merchants of another and so on and so forth, and wallets can transfer money from between them. So there's also Visa and MasterCard guys in the room, and I raised my hand and I said, hey, like I was not paid to say this, but like, are we solving a problem that's already solved by cards, right? So do we really need to do these things? And I think what people think of cards is actually they get focused on the form factor. Cards are basically a line of credit with a seamless way to check out, call it convenient enough and widely accepted way to check out. And it is a form of buy now, pay later. It's just that it's not a fixed installment product. It's a line product versus an installment product. And so I don't think that the buy now, pay later products are necessarily very different. They're just cleverly designed with card interchange now replaced by some form of subvention model. So the merchant or the brand or somebody, so actually cards are only paid for by merchants.
Correct.
And the buy now, pay laters are doing a smarter thing. They're going back to the brands who want to promote and sell their stuff and basically saying, I'll use those incentives.
Yeah.
So I actually don't even think they're that different, core products. They're, to your point, they're fulfilling the same need of users to pay later, have either a line with either variable, call it interest or time period or fixed installment plan.
I think there's an important difference between usage of status and points. For example, a lot of consumers actually use Amex, and there are two different reasons why, let's say, we use an Amex or another card. Let's say more rewards, but also significantly higher status when we take that card out, right? So the question is that a product which has evolved has become multi-tenant in terms of its attributes, right? You can't just take one attribute and just suddenly make it work, right? Because like classic, you're at the airport, you are at the lounge and you're showing your card. You love the idea of 4 people watching your card behind you. And that is a human motivation you cannot ignore. So the question is that how will you continue that motivation in a digital world in a unique way, which nobody thinks about, because what we think about, there are two axes, right? So one is of motivation, one is of ability and ease, right? So tech founders constantly think about make things easy to do. But the thing is, I also want inconvenience to show my status. So how are you going to do both of these things? And I think all the founders who become very good at motivation axis and ease of use axis, they will actually create the highest amount of wealth because ultimately there is no money in utility, right? Ultimately, all margins disappear in the long enough period of time. Utility will never have any margins. And all the margins are in products that will increase your status or give you hope. So the question is that profit pools are getting concentrated on this axis, and you will compete the hell out of each other and become zero. And like payment margins across the world has become almost zero because everybody's making it constantly easy. But what about my motivation to look cool?
Yeah.
That is the opportunity.
Actually, on that topic, let me ask a very fun question, which we have not talked about. Yes, in 5-10 years, what do you think is UPI MDR? If you were a betting person in 2030, what happens to MDR on UPI?
My bet is UPI MDR will never come, but if UPI will have credit lines coming on that, the MDR on that will significantly be different. The rails will be established through UPI so that there is no new machine requirement, all of that. So I may not be long on physical machines anymore, and I would say smartphones on both the sides. I don't even think QR codes will exist. I think there'll be two phones who can exchange value and do a transaction because it's already there. Like doing this extra QR code sticker, putting amount, all of these are transient stages of all of the stuff that's going to disappear in some time.
Yeah, there's an interesting question, Kunal, on the topic of trust. What is the key to building consumer trust for fintechs in India? Let's say in investment planning space, but in general, like, you know, how do you build trust?
I wish there was an easy answer to that. But I can tell you one thing, that consumers are less likely to trust something that is new unless it's done by people that they really, really know well, right? Would Cred have managed to get, let's say, the first 100,000 customers without Kunal Shah not being known on social media and trusted by some people to say, it's okay, let's do a 1 lakh rupees transaction on this platform. Kunal Shah is a known guy, right? Like, so the investment that I made on my social media since last 10 years is the currency that I could cash by launching a new company. Now, the advantage of this is I can launch a new company and still get 1 million customers very quickly because the trust is something that is sort of fungible and kind of goes to more, right? And there are interesting ways to think about that. And I think building reputation is like depositing 1 rupee every day in an account. You can't deposit more. You can only do 1 rupee a day, but you can withdraw the entire account in 1 day by doing one stupid action, right? So the thing is, creating trust requires you to be in the company of trust. Who's investing with you? Who are your early customers? Do they vouch for it, right? Do they give their word to the new customers? Like, hey, ye cred kya hai? Like, yaar, I know Kunal is a very guy. I trust him. I like his content. Like making videos of your point of views and being very clear and consistent about it also creates trust. So according to me, trust has a combination of do you have integrity? Like, do you demonstrate integrity all the time? For example, let's say if I was low integrity founder, would Sequoia ever invest again in the same founder, right? So these are markers of integrity, markers of consistency, markers of benevolence. Like, what are you doing for the community, right? What if like I was like roaming around with this fancy car, and instead of doing Indian investment and paying it forward, you need to think about reputation in a long time frame. And Shailendra, we've discussed this multiple times.
Yeah.
All bad behavior is rooted in being short-term mindset, right?
Yeah,
all
totally.
Behavior will always have a long-term mindset, and reputation and trust is about being long-term, right? Being slow about it, because the slow ones is very hard to disrupt, right? Reputation is like an insurance that allows you to make so many mistakes, which companies with no reputation will instantly disappear.
Yeah, in specifically answering that question, I do think there's two very interesting ways to build trust in the world of tech today. One is that I think, and this is especially applicable in the US, but also applicable in India, there's all this, you know, when you open any account and you sign 20, 30 pages of fine print, you know, and you don't know what hidden charges there are and, you know, what will happen when. I think one thing for fintech founders is, you know, tech platforms inherently allow for much greater transparency, and creating a product with high transparency immediately enhances trust. And, you know, taking away all these hidden charges and so on and so forth, which, you know, on credit cards in the US were notorious for these things, right? All kinds of fees and charges that you didn't know, and they would come and hit you. And same for other kinds of financial services products. In fact, US has seen so much consumer litigation on this topic, where over the years, US banks and so on have been forced to disclose more. But I think this is still a prevalent problem. And even with incumbent financial services businesses in India. I think second thing is, content marketing is becoming very interesting. So, educating users about financial products, the masses of India, there's probably a massive opportunity in, call it, mainstream financial products, going from, whatever, 30, 40 million credit cards to 500 million cards. When for that to happen, people will need to get educated a lot more about the benefits of using, not just this, but savings products or investment products or insurance products. So I think transparency and education are two things that especially tech startups are uniquely positioned to do quite well.
Makes
And
a lot of sense. Makes a lot of sense.
yeah, I'm just trying to answer the question from the founder who asked that specific question, at least my quick views. Then now there's a question on, okay, there are some very specific questions which are hard to, let me try to scroll. I don't know, Kunal, if you can read any that.
I'm answering this question about today, a very small percentage of people have credit cards in India.
Yes,
What the scenario
sure.
can be in 2030? That's by Kedar. The direct correlation to credit card issuance is people who are filing income taxes. Okay, income tax filing demonstrates stable income and actual demonstration of income, and as more people come to pay taxes and regularize their accounts or get into the labor force, we'll see that. But the biggest factor that is not helping grow the credit card base is that women participation of labor. Only 8% or 7-8% of women are participating actively in urban India on labor force and don't have financial income, but independent income. And that is the biggest factor to worry about, because like all these people who have studied MBAs and all of that disappear from the workforce, which is a big problem for India to worry about. And currently 92 to 93% of all credit cards are owned by men, and 95% of all loans are taken by men, right? And
staggering.
till that changes, as a country, we are not going to progress forget about credit cards, right? We need to make uh, uh, a progress in that particular metric where we will see women contribution to the labor force and income and dual income households kind of really drive. Because if there is a dual income household, they create 10 jobs. When there's a single income household, they create only 2 jobs or 3 jobs, right? And I think that one mindset will change the country forever.
Kunal, you raise a very, very important point, which is also that when you look to the next 10 years, I think, financial products for different segments of society and also for different affinity groups is probably a mega opportunity.
For sure.
So right, like because basically, as you think about hundreds of millions of consumers consuming financial products, like, one thing we've been looking at and very excited about is if you could find a fintech company focused on women, for instance, right? To your point about there not being enough. So, like the microfinance industry, which we invested in 10, 15 years ago, did focus on women, right? And women borrowers and, and so on and so forth. But there have not been, new age companies yet. And now there's a few young startups that are quite interesting. But I think that's probably a very, very interesting opportunity. Similarly, I think there are also other probably minority groups or industry affiliate groups, etc., where probably better financial products can get created and targeted.
Yeah.
And call it stratification of financial services, both segmentation, so segments, as well as stratification to go into lower tier cities and towns and rural. I think both are probably very significant opportunities, because just like we're now seeing in India, consumer internet has become like China, where companies that do well in tier 1 cities are different from the companies that do well in tier 2, tier 3, or tier 5 cities, right? In China. And we're seeing the same in India internet.
You're saying is a very interesting point. So historically, financial services were, let's say, geographic segmentation.
Right.
Then there could be demographics segregation. Correct. But the ultimate one will be the psychographic segregation, right, which is an interesting stratification by itself. That what if all engineers came together to a one format because they have a point of view, and let's say, what if there's a geek bank, right? And the geek bank could be a very different animal and appeal to a very different set of people, and their identity may get linked with that, because I would love to carry a geek card at a bar because I'm the cool guy who can only get in because I fit into this particular demographic or the psychographic. So I think I do believe, like, I mean, like a completely absurd idea, Shailendra, and you laugh at this because this is not possible. It's still fun to discuss. What if there was a separate bank for everybody with IQ above 100? What if you could carry a card where you do an IQ test and get that card and say, hey, I'm IQ above 100 and therefore I'm going to be in this pool bank? It sounds absurd, but in a long enough time frame, it may not be absurd.
Well, in a country as focused on educational success as we are, there's probably a market for even that. Although, as you know, I'm not a fan of very, very high IQ, and I prefer creative people and more balanced people who have both EQ and IQ. But we will be digressing into a separate topic.
Not in the IIT Bombay alum event, like
yes. I don't want to go there. But my view is, humans have too much IQ. The smartest people tend to overthink things, and creating stuff simple and having very high IQ are at odds with each other, right? Like seeking for simplicity and having very high IQ, they are inherently at odds with each other.
Yep.
Some people can appreciate it, but some can't.
Yeah, I know what you're saying.
But okay, very good. There's a question on SMEs in India and lending and IT solutions for SMEs. Outside formal banking sector. Also, okay, there's some tax related comment on this question, which I don't think we can get into. But one thought on SMEs and financial services for SMEs is, there is a very, very big change happening. Like Kunal said, post pandemic, every kind of small business user is now starting to use tech products. We have Khata Book and Pagar Book, two search portfolio companies that have lots of traction with SME users. There are many more. And I think SME adoption of tech and digital products is at an all-time high, and probably financial services will follow next. And obviously some companies like both BharatPe and Razorpay have very large numbers of SME users already who are using those payment platforms and then starting to use other financial services from both those companies. So I do think lots of SME-centric financial services penetration will get aided by tech. And that's probably a big area of growth in the next few years. Kunal, I don't know if you see any other questions that are...
I think just to add to that point, I think this is the same thing about focusing on a segment and demographic than truly, really understanding them, right? The problem with the traditional banks is that everything has become departments, and the departments have lost a sort of a consumer view because they are segmented in a certain way. So,
right.
Like there's a beautiful line I read that don't ship your org chart, right? I think all the companies end up shipping their org charts, right? And the consumer is not your org chart. Consumers' needs are very different to your org chart. And there is a disruption possible in the org charts by designing, creating these new decentralized models and building for that. And there are very different ways to get to these customers, right? Like you can be a GST management platform and become a very large, let's say a neobank. You could start with a good accounts payable platform and become a very, very large credit line business, and so on and so forth. And I think it's a matter of time where people start removing the molds of the past and asking very simple, basic questions.
Yeah, very good point. Kunal, last question. This is a super interesting one. It will take us in a completely different direction, but I do think it's worth doing. Question is related to, do you see SPACs fundraising in India soon? But I think the question is wider, which is that how companies go public or how companies access financial markets. So we haven't talked about capital markets in the context of fintech, but probably massive change is expected in the next 10 years, right?
For sure. I think I see disruption in how cost of capital, like, Chandra, how is it natural for trillions of dollars earning negative interest in the world? Right. And we are struggling to give loans at 16%, right? Like, it's just absurd. So the world is going to become insanely more efficient because the forces will start combining. And historically, the data was not transparent for a lot of people to participate. But as trust becomes easy to do and data becomes easier to understand, I think the world is going to become interestingly flat, where we cannot even think of India as India anymore. There'll be a lot of global money coming in. on a lot of segments of customers and creating interesting opportunities, but also accessing capital. For example, SPACs is an interesting way to get access to public funds, but we should not be surprised where consumers of companies will become larger shareholders also in some ways, and kind of help companies accelerate these things. And all of these are regulated spaces and will be pushed boundaries on. But if, let's say, a world somewhere starts innovating differently and creating some of these structures, many countries will be forced to think about this. And one thing that we have not thought about is that there is so much market cap in crypto, which could be actually do decentralized lending to the real fiat money kind of a thing. So those universes will start merging very, very soon. And honestly, very few people truly even understand what that means because these universes fundamentally have never been aligned together.
Yeah, I couldn't agree more. By the way, I think regulators have the single most important role to play for capital markets reform so that more people from around the world can invest. I think SPACs and other more interesting, funding instruments can be launched for crypto, for DeFi, for new and interesting kinds of licenses. By the way, I think one very long topic, it will take an hour, is what new financial licenses should be, new kinds of financial licenses should be given out. It's a topic we once discussed it, with a group in Singapore, very interesting. And I think many governments around the world are thinking about it. But I think we're out of time, Kunal. Awesome to chat. And thanks to everybody watching and to the IIT Bombay Alumni Association for having the two of us spend time. Thank you, Bidyut and Devesh and the support team.
Thank you, guys. Thank you, Shailendra.
Thank you. Cheers.